Good day traders, I'm going to show you the NFP that happens on the 3rd of September. As you can see, in the daily time frame, you can see that this is an upward trend. So we have the structure, high, low, higher, high, higher, low, higher, high, higher, low, and so on. Okay, so we are on the uptrend. Now, if you look at the H4, as you can see that price has broke here, the previous resistance, tested and never closed the candle below this area. So we can know that the price has rejected this area very strong and it's going upwards. Okay, so how do we use the NORA entry? In this case, let's look at the H1 time frame. We cannot see any setup over here. Now let's move on the M30 time frame. Nothing much going on. Okay, good guys. I found something on the M15 time frame. As you look at the M15 time frame, we can see that there's a potential SNRC1 setup. So I'm going to draw the SNRC1 setup. So we mark the base, right? The Rayleigh base Rayleigh. So which is the Rayleigh base Rayleigh? The Rayleigh base Rayleigh would be this red candle. Okay. At the same time, if we move to the candlestick chart, if we move to the line chart, this will be a resistance, capital letter A. So we go back to the candlestick chart. This is a potential SNRC1 setup. So what we can do before price even react is we can draw trend line. All right. So like we said, always say trend line can always be T-buy. Don't have to be exactly. So let's say if you're not sure, you can just draw multiple trend line. Okay guys, multiple trend line like this, right? So whichever price reacts, then we know that it could react around this area because we treat the trend line as a confluence only. It's not even as an entry point or a setup. All right guys. So if you look at the M5 setup, we can see that this M5 is a potential QM manipulation. We have the high, low, higher high, lower low, price, make a base, align with the left shoulder here, which is the Rayleigh base Rayleigh, and broke the head of the QM. Okay, so we have the M5 as a QM manipulation. We have the M15 as the SNRC1 setup. If we look on the time frame of M30, okay, let's remove this. Time frame of the M30, this is a engulfing candle. Okay, engulfing candle. So the setup is in the engulfing candle. Yes, on the engulfing candle. So as long as it's in the engulfing candle, then we are considered as a low risk setup. So price will then play around. Okay, so let's have a look what happened to the M15. Price then take the order here. Okay, price then take order and continue on the uptrend. So we can see that during the NFP price, so high. So we can see that during this time, price took this order and continue on the upwards. So we can see that the price has already given us an indication, a setup indication saying that there is a potential that the price will go on the uptrend. Now, how do we identify that? Like I said earlier, if we go on to the daily time frame, it's on a uptrend structure. We have the high, low, higher high, higher low, higher high, higher low. Okay, and if we draw the danger zone in this area, this is considered as our danger zone. Okay, so here, so price has not react to this danger zone before it took our order on the M15 time frame. Therefore, our price is still considered low risk. Okay, guys. So if this price has not take our order, but price has touched this danger zone on the daily resistance, then it is considered as a high risk setup. We do not put our pending order anymore. We shall delete our pending order. So I hope this is some of the few example that we can trade during the big news. So on the next NFP, which is in October, hopefully I can share something, then we can all learn together as a forward testing. So I'll see you soon, guys. Hello guys, I'm going to show you an example here for a NORA entry. So here we do have the H1. So before price, let's say price haven't react to here. So this is our danger zone here. So if we change to the line chart, there we go, at the edge of the support, come back to the candlestick, and then we mark our H1 danger zone. So H1 danger zone, we mark this. Beautiful. Next, what should we do is we wait for the price to do confirmation of rejection. Now, if you want to use the NORA entry, we of course have to go to the smaller time frame. Okay, so here price has reacted. If we miss it, it's okay. So here example. Okay, if we go to the M1 time frame, we can see here there is a very beautiful QM. There we go. You can see this, guys. Let me color this as red. All right. So here we have the low, high, lower, low, higher, high. Price come in and then continue on the uptrend. So if you want to measure what is the risk and reward, let me try this. Long position. So we set our here and our risk. So here is about 12 pips. We're gonna set it to 15, maybe 16 pips. Okay, instead. So 16 pips. Now the price has reacted more than 30 pips. Okay, we can set here 48 pips. Means here the previous high. Okay, so we can set our TP on the previous high, or you can set here as your TP as well. But this TP, the risk reward is not worth it. What we want is we want to go at the higher. Okay, why do I choose this high? Because if we go look at the 5-minute time frame, this will be the previous high. Or you can also TP here. If I can see here, this is a clear QM. Okay, clear QM. Okay, guys. So QM on the M5, you can set here as your first TP. Okay, so I'm gonna make this first TP. All right. So we make first TP. So risk reward will be around 2. Okay, so we reach 16 pips and our reward will be 32 pips, 33 pips. Okay, so this is worth very good risk reward ratio. Okay, now if in case we miss setup here, there is another potential setup here. Let me draw again. So I'm gonna color this time this as let's go with purple, or maybe even beautiful green. Okay, so green. You can see here this is a small QM. Okay, guys. I'm gonna color this. Okay, there we go. As you can see here, small QM. So this is a low, high, lower low, higher high. Price comes back to this area and continue on the uptrend. Now, how much risk and reward do we set on this? Let's click here. Okay, there we go. So we will risk here at the lower low of the QM. It's only 4 pips. Okay, guys. So let's put 10 pips. Okay, instead. Maybe 8 pips is sufficient. Okay, because the risk that you're risking is only 4 pips. Okay, I'm going to put 10 pips. Our risk. Now I'm going to reward here. Okay, this is risk reward. We can put on this previous high of the QM. So here, risk reward will be around 2.26. So we risk 10 pips. We risk 10 pips. And our reward will be 23 pips. So this is a very good risk reward ratio. If we move at the M5 time frame, we can see that this is a confirmation, which is the bullish engulfing. Now, why do we look for buy? Because price just reacted from the H1 time frame danger zone here. Okay, danger zone. So the next danger zone you want to look out is here. All right, the next danger zone to look out is here. Okay, but price just go up, pass through this, break this danger zone. H1 could be it reacted from the H4. So H4 is also in this area as well. Resistance. Okay, if we move here, see this is a support. The H4 support as well. Okay. So price reacted from H4, H1. So this will be a strong support. Okay. So let's get back to the M5. Now, if you look at the M5s, here is a setup for the QM manipulation. So this is the high, low, higher high, lower low. Price make a rally-based rally aligned with the left shoulder of the QM. But instead, price react to this QM. It did not go down. Instead, it make a rally-based rally, break this previous higher high, then come back down, and then continue on the uptrend. So this is a QM manipulation. At the same time, in the M1, we can find is a QM setup. Okay, we have the low, high, a little mini low, high, lower low, higher high. Okay, come back down and retest. So M1 we can set up as a QM buy. At the same time, if you look at this, guys, I draw a trend line. Let me see if I can draw a trend line here. There we go. See, this is a beautiful QMC. Okay, just draw a trend line. This will be a QMC with the M5 confirmation as a bullish engulfing. Now let's look at the M15. Do we find any confirmation? Okay, on the M15 we couldn't see anything. Only what we can see on the M15 is this is just a engulf candle, means 2 bullish Marubozu. Okay, yeah. So if we look at the M30, however, it's a strong confirmation. If we look at the M30, this is a bullish engulfing. Okay, price react with a bullish engulfing from the danger zone of H1, H4. after it form a bullish engulfing, then price comes back in here. You can see after this candle has closed, price then come back down here, take the order and continue on the uptrend. So this will be a very strong buy for us. Okay guys, so M30 is a bullish engulfing. M5 we can see that it is a QM manipulation, and the M1 is the QMT buy. So we have the low, high, lower low, higher high, come back down and continue on the uptrend. So this is just one of it. So for the risk taker on this side, if we do not have confirmation, but if you're willing to take this risk for a buy, okay, because price gonna touch this danger zone, H1, H4 support, then you can try to buy even though the confirmation here is not strong. There is no proper confirmation in this area. So it's okay. So I'm willing to risk 10-15 pips here. Okay, and then my reward, it will be double. Okay, so it's up to you guys. Choose wisely your risk and reward. That is the most important part. Okay, so I'm not sure why is this lag. So that's all I want to share about this Nora entry. I will continue to do this kind of video again so that you guys can learn even more. See you at the next video. Good day traders. So in this video, I'm going to show you how can we use the Nora entry to minimize our risk when we entry on a daily setup. Okay, so in this setup, there will be a FOMC news. Okay, not only that, since price come in a strong momentum, at least we do have a little of a indication that we can trade, so that our risk is small, but our reward will be very big. So first of all, here we can see there is a QM daily. Okay, let me mark the QM daily. Here we go. Okay, so I'm gonna mark this zone, okay, as our monitoring area. So not only that, if we go to the H4 time frame, we can see that at the H4 time frame, this was a previous support. Okay, very good. So this previous support hasn't been tested before. So if you do know the concept of support become resistance, so this is the SBR. So this SBR, after a break, the price normally would have to test as a new resistance before it continue downwards or before it wants to break the price. So in this area, we can see that this is a potential SBR. So we do have good reason. First of all, it's a QM daily setup. At the same time, in the H4 is the SBR setup. Okay, so how can we trade using the Nora entry to lower down our risk? Since the H4 and the daily time frame, it can goes up to 100 pips of zone. So if we look at the M5, when price has touched this area, okay, it touched the zone, and this zone doesn't have to be accurate. So it's just something that, like I said earlier, just mark a horizontal line at the left shoulder of the QM daily. So at the H4, this is some support area. Okay, support area. So we use this as a SBR setup. So if we go to the M5, we can see that the price touched the zone and come down. However, this considered as a high risk bearish engulfing. So when it is high risk, then our confirmation is not that strong. However, we do have a reason that this is a QM setup. Okay, on the daily time frame, H4 is tested as a new resistance. So how can we trade on this? So first of all, let's check on the smaller time frame, see if we can find any base here. So we can see that there's a base here. Okay, this is a drop base drop area. Okay, let's check the H1. Yes, drop base drop area. M15. Okay, so all these are the base area. So once there's a base area, then there's a potential that price will react in this area. Okay, so even though the price FOMC comes up very quick on the high, we do not trade first. Okay, we do not trade first. So what should we do is we wait for price reactions. So when we look at the M5 time frame, price has reject this area and slowly comes down. So if we look at the M1 time frame, we can see that there's a potential QM. Now I'm going to draw this QM area here. This is our left shoulder, the left. Okay, low, high. So high, low, higher, high, lower, low. Okay, it breaks the structure. So now price will try to come back to this left shoulder and continue on the downtrend. Now, how do we calculate our risk and reward? It is very important that we have our risk and reward so that we know that whether this trade is worth to take or not. So here to the top high is about 15 pips. So let's set our SL to 20 pips. Okay, guys? So first, we can TP in this area close to 33 pips, or you want to TP at this previous low. Okay, so this is a previous low. However, you can go another previous low again, which is the previous support after that. So here we'll have a very good risk reward ratio, which is around close to 6. Okay, so you can put two position. So let's say if you want to control risk, you want to put one lot, okay, or 0.1 lot, then you divide by 2. Okay, divide by 2, 0.05 or 0.5 in each position. So one you can TP in this area, another you can TP in this area. Okay, so let's say we want to TP in this area, one position, and another position we can put here. So risk 20 pips, and our reward will be around 32 pips. Okay guys, so we can put two positions, and let's see. There you go guys. So this is all about the Nora entry. Nora entry is about the mini QM inside the setup. So we have the daily setup QM, okay, and the Nora entry on a M1 time frame. You can see that this is a QM, mini QM in a bigger setup is the QM daily. Okay, so Nora entry, this is all about Nora entry. We cut down our risk. Okay, so from here, we cut down to 20 pips instead of 100 pips, cut down to 20 pips, and then our reward is very big. See, price quickly come down. Less than 10 minutes, you can get your TP. So it is a very good risk reward ratio, yeah guys. Less than 10 minutes, you will get 121 pips. So that's the good thing about trading gold. Most important part, guys, you should know that price react from certain area. So if you see there's a buy setup here, please do not. Okay, it's very dangerous. All right, guys. If there is, so for example, here maybe there's a buy setup here, we do not take the buy. Dangerous. Okay, what we want is to focus on the sell after price reacted, even though there is no confirmation of rejection. As you can see here, the bearish engulfing is considered as high risk. But if you're willing to take the risk, go ahead. Okay, most important, this is what we call the risk taker for swinger. All right, guys. I hope you learned something from here. Hopefully I can show you more videos. See you. Good day traders. So in this video, I'm going to show you on the danger zone H4, which we will be using the M1 as our entry for Nora entry. So since this price is still fresh, so I'm going to show you so that we can see what is price doing. So I marked the danger zone H4. So we mark from the edge of the support all the way down to the shadow or the wick. And then we move on to the H1 time frame. As we can see, H1 time frame has not completed the candle. So let's move to the M5. Okay guys, so M5 as you can see here, the price has touched the zone and reject with a bullish engulfing on the M5 time frame. So let me delete first. Okay, so the M5 has made a bullish engulfing on the M5 time frame. So if we move on to the M1 time frame, what can we see? We can see that this is a setup for QM here, since we do not have in seconds, but here there's a QM, okay, mini QM here. So we have the low, high, lower, low, higher, high. Alright guys, so we mark this as our monitoring zone. Okay, and then we move back to the M5 time frame. We can see that this confirmation of the setup is in the engulfing candle. Okay, so now let's go back to the M1 time frame again. Okay, so what we should do next is to calculate our risk and reward. So I'm going on the long position here. Okay, so our SL somewhere around here is around 11 pips. So let's make it 15 pips then. Okay, so 15 pips, and our TP will be at the previous high. So here we can see that our risk reward ratio is already 2.29. So we reach 15 pips, our TP will be 34.4 pips. Okay, so once we have a good risk reward ratio, then this is a trade that we want to take, we are willing to take. Okay, if we don't have to wait for the H1 or M30 to reject, okay, because gold act very fast. So we take the M5, M15 as confirmation, M1 best thing trade about it. So let's look at the price. Price will then touch our zone and hit our TP. Okay, so like I said, this is very fresh still. Okay guys, so I hope we can learn something from here. If there is more Nora entry video, I will do more. Okay, there are actually a lot. It happens a lot all the time here. A lot of Nora entry. As long we need to go and do more back tests, definitely you'll find a lot of setup here. Okay, even here you see guys, low, high, lower, low, price comes back down, take this order and goes back up. Okay, so there are a lot, yeah. Okay, so that's all guys. I see you in the next video or in the class again.
Hello and welcome to Bystra Legacy International.
I'm Ho Chang Seng, and
I'm Terence Day. Together, we are your chief in Bystra Legacy International. First and foremost, we would like to thank you for trusting and have faith in us. In honor to teacher Nora, we are blessed by her to continue her legacy. Therefore, rest assured that we will give our best, nothing but the best for you. In order for us to give our best to all of you here, we would like to request three things from you. Number one, always have an open mind while learning. Number two, have utmost respect towards each other in the community. And number three, your commitment in submitting assignments, back testing, forward testing, and able to receive constructive feedback.
In Bystra Legacy International's syllabus, you will learn the basic that relates to Bystra setup and of course the Fantastic 5 setups. You will then learn the proper way of determining the price directions and most interesting part, mitigate risk using the NORA entry concept which improve the risk reward ratio.
In this course, you will learn 5 different sessions in minimum of 5 days. You are required to complete the videos by number without skipping the videos. Certain videos require you to do your assignments and or need to submit to the assignment group in Telegram once completed your course. Each session will release 24 hours after you are on board. Each session has graded quiz, which you need as 80% before you are able to move on to the next session. And of course, you are able to review and revise on what you had studied.
Upon completion of the course, a certificate of graduation will be issued to you. At the end of the course, you'll be given links to the Bystra Legacy International Discussion Group, Assignments Group, and also the Mapping Analysis Group. Once again, welcome to Bystra Legacy International and we're looking forward meeting you soon.
Hi, I'm Terence. Once again, welcome to Bystra Legacy International. Thank you so much for making the right choice. And this will be the beginning of your transformation in trading. Fundamentally, in trading, you are required to have the right mindset before you embark in this journey. What are the right mindset in trading? It's asking the important question. What is your big why? Knowing your big why. Why are you trading? Oftentimes, majority will answer financial freedom. However, I would like to invite you to deep dive your big why because this will change the way you trade. Some examples of the big why. I would like to be debt free. I would love to have more time with my family. Travel all around the world with my family without worrying the cost factor. Having a business that allow me to manage in any part of the world. These are some examples of the big why. Personally, for me, my biggest why will be having a business that allow me to manage in any part of the world, so long I have the internet connection. That is a saying. When your why is big enough, then the how will be easy. The question is, what's the how? The how is the Bystra Legacies method, which you will learn next in this platform. All I need from you is your commitment to learn with an open mind. Whatever you have learned previously, put it aside first. Because with an open mind, you will definitely able to absorb as much as possible throughout your journey with Bystra Legacy International. Having said that, I'm looking forward seeing you soon. Thank you so much again for making the right choice.
Good day traders. Today I'm going to show you how do we use the MT4 chart and also the trading view chart to save as a screenshot so that we're able to submit our assignment. Now assignment, it is very important that we're able to provide more information and precise so that later on when you submit your assignment, we're able to check have you really understood of what you have learned during this class. Okay, so let's get to the chart straight. Here, this is a trading view chart on the pair GBP JPY on a daily time frame. As we can see here, there's one setup is called the SNRC2. So I'm gonna mark this our horizontal line. Okay, a line with the capital letter A. If we go to the line chart, we can see this is a capital letter A. That is very good. Okay, there's an entry point. This is the entry point. Drop base rally. So I'm gonna mark the zone. Okay, mark this zone with a square box. There we go. Okay, so our entry here would be 140.038. all right, so now let's look at the weekly chart. Good, the weekly chart, okay, this will be at the body of the candlestick, so the confirmation will be strong in this way. It's not at the wick here. Okay, it's not at the wick here, so we do not want on this wick, we want at the body of this. Okay, at the same time, as we can see here, price has already break out on the weekly resistance. Okay, this is the weekly resistance. If we look into the line chart, this is a weekly strong resistance, price breakout, re-entry, re-entry, this area. Let's look at the daily time frame. Okay, re-entry on that area and goes back, continuing on the uptrend. So now how do we submit this assignment? What you should do is we want to have the time frame, the setup time frame, which is the entry time frame, which is the daily, as our main time frame. So what you should do is take this, go to this picture, take a snapshot, click it, save chart image. Now by default, this file will be saved in your download folder. Okay, so we have this first one. Second one, the line chart. We want to show that the line chart, this is a capital letter A. Same goes, save chart image. There we have save. And the last thing to do is to go to the confirmation multi-time frame. Okay, it must always do a multi-time frame. Okay, this is another way. Sometimes we do not want to just take this whole snapshot and then save it into the file. What we can do is this. We can use this software called a snip and sketch. So you can just type in the search here, snip and sketch. Click on this new, screenshot this area. That is very sufficient. Now I'm going to save this at my download folder together with the rest of this. There we go. Okay, so once we have completed doing all three, now what we can do is either you can go to using the Excel or Paint, but I normally would like to use PowerPoint. Okay, so PowerPoint, there you go. This is empty slide. Okay, so I'm going to insert those pictures that I saved earlier on, which is in the download. So this is the first one, second one, and the third one. There we go. Okay, so you can see I have all three pictures. This will be my main pictures. Okay, I'm going to put this, send to the back. This will be my second pictures. Now, in this case, I do not have to use all of this. I just want to show that this is just at the level of the capital A. So I can just crop this, click this, crop this area, choose this area, and like that. That's it. I just want to put and add the capital A. Okay, so I'm going to click other parts. I'm going to right click this. I'm going to put a border outside so that I can identify it. Okay, same goes with this one, the weekly time frame. So I'm going to border it. Okay, good. Now we can just align this. I'm going to align with the PowerPoint presentation. Okay, so this is one of it. This is the line chart. This is the weekly confirmation time frame. Okay, so what I can do is I'm gonna put a text here. There it goes. Okay, so this is an SNRC2 daily setup. Put it here. Okay, so I'm gonna copy this, or you can just insert another new text box and put it here. SNRC2 daily setup line chart. All right, line chart. Okay, so we can just make it longer anyhow you want. And this is another one. We're gonna insert the text box and put here the weekly confirmation, which is at the rally base rally, okay, of body engulf, body candlestick, sorry. Okay, weekly confirmation is at the rally base rally body candlestick. Okay, most important part that it is at the body, it's not at the wick of this candlestick, yeah, at the body. Okay, so once it is done, next thing you should do is file, save as. Okay, you can go browse. I can go back to the download. You can save this as a JPEG or PNG. It's up to you. So I'm going to save it as PNG. I'm going to put this as GBP JPY. This is today on the 15th of August 2021. And that is my first assignment. So just this slide. Okay, so I have saved this. We can go back to our download and look at this. This is how it looks like, and then we can submit this as our assignment. Now this is using the TradingView chart. Now let's go look at the MT4 chart. So MT4 chart, there's an example here. So the same thing as well. So I'm just going to teach you how to save this, and the drawing, everything will be still using the same as a PowerPoint. So what you can do is we go to the weekly. Okay, weekly. We go right click. Doesn't have to read. Okay, this is the major. We want to show what is going on here. So we click save as picture. Click here. So remember guys, we do not want to click on the active workspace or active chart and untick this post image online. We just want this active chart as is and click OK. Okay, and then save it any folder that you prefer. I will save back into this download folder. There it goes. Okay, now if I go back here, I can insert the picture from this device. There we go. This is the one. Okay, this is how it looks like. It's beautiful, isn't it? Okay, and then we can just do it however we want. Now the creativity of how you want to draw, of how you want to submit, is up to you. Most important part is that whenever you submit your assignment, we'll understand what have you wrote, what do you understand about the assignment. Okay, so put in as precise information, as little words as possible. Okay, straight to the point. We just want to see whether you're drawing correctly, you're marking correctly, and that's all. Alright guys, so it's not difficult. Same goes if you want to have screenshot this area, you can just use the snip and sketch. Okay, I'm going to trace a new one and then just like this. Okay, choose the area that you want to save and then just save this. Save back in the folder. That's it. It's simple as that. So it doesn't mean that you have to follow the ways that how I did it, but it's all up to you. You can use Paint, Excel, or any other pictures format, or you want to use Photoshop, is fine. Most important part is that we want to see your assignment. Alright guys, so I think that's it. Hopefully you can just try out how to do this. It's a very simple thing, very basic. If you're not sure, I think Google is a very good friend of how can we draw our assignment on MT4 or the TradingView. Alright guys, that's all. See you in the next class. Okay guys, I'm gonna show you that you can use the Bystra Legacy International template for your assignment. We need to watermark every assignment that you did so that people wouldn't able to copy your assignment. And at the same time, we can avoid from scammers as well. Okay, so here's a zip file here. You will be downloading the zip file. What you should do next is just right click, extract it here. Okay, so you have a folder of Bystra Legacy MT4 template. Open this template, you receive one .tpl file and you have one folder of indicators. So these three are the indicators. Next, what you should do is you go to your MT4, click on the file, open data folder. Next, you go to MQL4, click on the indicators. Now we go back to the folder that you have here, copy all these three, copy, and then we're going to come back here to the file that we opened from the Open Data folder MT4, right click and click paste. So you should be pasting the three files, the color level model, symbol and time frame, TBST clock. I'm going to explain to you what are these three later. Next, go back to your folder that you unzip. Go back here, .tpl file, Bystra legacy.tpl file. We copy this, right click, copy, go back to the folder here. So from here, we click to the, go back up to the folder, and then we go to the template folder, and then right click and paste it. Once you have pasted all these four files, what you should do is you go to your MT4. So I have MT4, right click, click on the template, and click on the Bystra legacy. And there you go. You will have this file, the candlestick. You can change this any color you want. So this is the watermark. You can change this as well. Just click, double click this, right click, label properties, and then you can change to your name. No issue. Okay. So, but this one you can't change. This one, it will follow all your time frame. What you should do is, when the first time you open it, it will be like this. But however, if you click on the time frame up here, it will change automatically according to the pair and also the time frame. And up here, as you can see, there are few tools for you to draw. So these are the shortcut keys. You can use this as a box. You click this, it will comes out. You can just mark it as a zone, or you want to be filled like this, no problem. Or you want to have a horizontal line, you can click like this. Okay, so there are a few things you can do here, no problem. Then there are the text that you can key in the words. Okay, I hope that this is a very useful tool for you for your assignment, and make sure guys don't forget your watermark. Okay, see you at the next class. Greeting traders. In this class, we'll be learning about the basic market structure. Now, it is important for us to learn about market structure, even though it is the basic of Forex trading. However, there are a lot of traders that are unable to identify where the price is moving upwards, downwards, or in a sideways range. Therefore, traders often make mistakes of buying at the top and selling at the bottom. Now, this is the mistake that we want to avoid. Definitely, we will buy from the bottom and sell at the top to maximize our profits and also to minimize our risks in trading. It is important for us to understand the market structure before we start to trade. Now let's begin our class. There are three types of market structures. The first is the uptrend, where the price moves from the bottom to the top. Next is a downtrend, where the price is moving from the top to the bottom. And the last is what we call the sideways or ranging zone. It's where the price is zigzag around this area. Let's look at the market structure uptrend. Now remember this. You need to know the high, low, higher high, and the higher low. So normally price will form in an upwards motion. Okay, where it will just continues to break the previous high. So once it breaks the previous high, at this bottom here, we'll mark it as the higher low. Price pull back, and we mark this as the higher high, and price will continue to go upwards. Now let's look here. Price has continued to create higher high, higher low, higher high, higher low, and then a higher high, and it keeps breaks the previous higher high. Where as you can see at this case now, the price has come down and broke this higher low structure. So once it's broke, and the price continued to go up and broke these higher high structures. Now when this kind of case happens, this higher high and this higher low is invalid. You will have this higher high, higher low, your higher high, and this will be your new higher low. Now let's look at the market structure for downtrend. Same as the uptrend, where you need to identify and need to know the high, the low, the lower high, and the lower low. So for downtrend, price will move on a downtrend motions, where price will create the high, low, price pullback, create the lower high, and broke the previous low. This will mark as your new lower low. So price continues to go on a downtrend, and we mark the structures lower high, lower low, and price continue on a downtrend. Well, as you can see here, price has broke the previous lower high, and therefore this lower high and this lower low is not a valid structure anymore. This will be your new low, lower high, your new lower low, and this will be your new lower high. Now let's move on to the next market structure, which is sideways. From here you can see price will only move in a zigzag motion where there is a resistance line and a support line. So price will move towards the support line, goes up the resistance line, and come back down to the support line and goes back up towards this resistance line. So it only moves between this zone. Now let's look at the example of the MT4 chart. Here on the market structure uptrend, we can see in the MT4, it creates a high, low, higher high, higher low, higher high, higher low. Same goes on and keeps going on doing the same structure. Now if we change it to the line chart, we can see even clearer. So this is your high, this is your low, your higher high, higher low, higher high, higher low, and continue. Okay, so the uptrend will only have this four structure, which is the high, low, higher high, and higher low. Now let's look at the downtrend. So in the MT4 charts, this is how the downtrend looks like. Yes, this high, low, lower high, lower low, lower high, lower low. And let's look at the line chart. Same thing that happens for downtrend. The high, the low. Okay, you can mark this as your lower high, this as your lower low. Lower low, yes. This is your lower high, lower low, lower high, and lower low. And continue. Okay, as long as moving downtrend, we should have this structure: high, low, lower high, and lower low. Next, we look at the sideway. So sideway in the MT4 chart, we can see that same thing. If you mark the resistance at the top and the support line at the bottom, and price is only zigzag moving in this zone. So for SNR trader, normally they will take this opportunity to sell at the resistance and buy at the support. How do we use market structure to identify reversal? This is actually is not very difficult to identify, and it's not very difficult to learn. Now let's look at the price. It is moving at an upward trend where it creates high low, higher high, higher low, higher high, higher low, and then when we draw a trend line, price will touch this trend line and bounce back up. Now what happened when the price decided to break this trend line? At the same time, it broke this previous higher low, so it has created a new lower low at this area. Now if we look at this, price comes to this trend line tested as a new resistance and continue to go downwards. Therefore, this will mark as a new lower high. If we draw this zone, this is like a QM structure. So this is an over and this is an under. So we entry at the left shoulder and price will go back down. So when a price is unable to break the previous higher high and continue to break this lower low, therefore this is a sign of reversal. Now let's look when the price moving in a downtrend. So in a downtrend, remember the structure, price will create low, high, lower low, lower high, lower low, lower high, lower low. So same thing as well. If we draw a trend line, right, you can see that the price is respecting this trend line. So what happened when the price decided to break this trend line? At the same time, it broke this previous lower high. Price comes back down to test this new trend line that it broke and continues to go upwards. As we can see here, price has created a new higher low, and at the same time this is a QM. Okay, QM, we have the over and under left shoulders. Okay, at the same time we have this is a low, high, lower, low, high, high. Price come back to test this left shoulder and continue on an uptrend. So when the price is unable to break the previous lower low, this unable to break this previous lower low and continue to break this higher high, therefore this is the sign of reversal. It is easy, isn't it? It is not very difficult to learn, but most important part is that we keep practicing how to identify the structure, and this will be a very useful tools for us to trade in Forex. So what should you do next is go to your MT4, go to your MT5, go to your trading view, mark the 6 structures. You have to know how to identify these 6 structures, whether it's an uptrend, downtrend, or sideways. If you're able to learn how to mark this high low, higher high, lower low, higher low, and lower high, you will have an advantage in trading in Forex. I'm going to use all these market structures later in most of our class. Okay? At the same time, you're able to sharpen and train your subconsciousness. The moment when you open the chart, you're able to identify what is the trend like and how should we trade according to the trend. The more practice you make, the more you will improve further. The next thing that you should do is to do 5 screenshots of the market structure, whether it's uptrend or downtrend. Do both. It is better to practice your eyes. Mark it for uptrend, high, low, high, high, higher, low. For downtrend is low, high, lower, low. Keep practicing. Do not stop. See you in the next class. Hello traders, in this topic I'll be telling you about the SNR, all related to Bystra setup. Now I know there are a lot of SNR concept that people are using in Forex trading. However, I am going to share to you that is only related to Bystra setup. So let's have a look. Support and resistance. So support and resistance is one of the most widely used concept in trading. In Bystra, we refer the SNR as capital A, which stands for resistance, or the capital V for support. Now what does it mean here? You look at the A. So if you see a resistance with the A shape here, sharp A, then we call it is a good resistance. And if we see strong V at the edge here, then it is a very good support. Now, most of our SNR will be referring into the line chart. However, if you are already very familiar with line chart and candlestick chart, then you wouldn't require to change to line chart. So normally for newbies or for new traders that is just familiarized with Bystra setup, it is recommended for you that to change to line chart. Then it is easier for you to identify the support and resistance. So when we look at support and resistance, it is better that the support or the resistance consists of a few candlesticks. Now guys, there are a lot of traders out there, they get confused with SND base as support and resistance. So I'm going to show you an example in a short while, okay? So let's have a look at the support and resistance. How does the support looks like in the setup? First, we need to find the capital letter V. As you can see, this is a V shape. Next, when we change to the line chart, we can see that this V shape here is very sharp. So we mark the line, or we put a horizontal line at the edge of the support. Okay, as you can see here, highlighted in the eclipse shape. When we change to the candlestick, it will look something like this. So when we said that it consists of few candlesticks, it's like this. See, you can see that this is 1, 2, 3, 4, and so on. Okay, as long as it is not just 3 candlesticks. For example, I'm going to show you later. Normally 3 candlesticks on the downwards is a rally base rally or drop base drop. Like in this kind, we can see that this is a good support, capital letter V. Next, on the resistance, it is the capital letter A, only without here. So the capital letter A will be our resistance. So if we change it to the line chart, it will look something like this. See, this is a very sharp A. So we mark the horizontal line at the edge of the A, okay, as highlighted in this eclipse shape here. So this is also considered as a strong resistance, okay. So if we move to the candlestick chart, we will look something like this, something similar, okay, something similar like this. Now let's look at the main chart for support and resistance. How can we mark them? So here, I'm going to show you one chart for the gold. Okay, this is a weekly time frame. Now, can you identify which one is a good support, which one is a good resistance, just by judging before we even move to the line chart? Now guys, let's try this. So you just take a note or whatever it is. Picture in your mind, which one is the resistance, which is the good support. I'm going to give you a few seconds. Let's try this out. Don't worry about getting wrong. We are learning anyway. So have you found it? Okay, let's move to the line chart. So as you can see in the line chart, we can see that there are a lot of capital letter and capital letter V. Now, are you able to identify which is the good capital letter A and which is the good capital letter V? Okay, let's look at this. So I'm going to mark first the resistance. So the resistance, I'm going to mark as a red horizontal line. You can see that? You can see this? So all these are the resistance. Here is also resistance, okay? Next one, let's look at the support. So the support is marked with the blue horizontal line. Okay, guys. So now we have marked roughly the resistance, and we also have marked roughly the capital letter V, which is the support. Now, why I do not mark this area or this area or this area here, 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 okay, as our support or resistance? Like I said earlier, if we can, we want to find the resistance and the support consists of few candles, not just 3 candles. So what I mean is like this. I'm going to mark this area first, okay, as red dot. Red area, okay, red circle area, and then we're gonna move to the candlestick chart and let's have a look what are these areas. You can see that these areas are actually not support and resistance. They are considered as supply and demand base. For example, here this is a rally base rally, rally base rally, drop base drop, rally base rally, rally base rally, drop base drop, drop base drop, and so on, guys. So make sure that when you want to identify your support and resistance, make sure that it is not a base, okay? So like this one, yes, you can consider this as a demand zone for base. However, this also as our resistance area, okay, guys? So do not confuse drop base drop, rally base rally as your support and resistance. Just watch out, okay? So I hope you're able to practice this. Try to go and look at the chart and try to draw as much support and resistance just so that you can get familiarized with your eyes on the support and resistance, and do not mark the wrong support and resistance. See you at the next class. Hello guys, welcome back to our next topic, and this topic will be learning about the supply and demand, which only related to the Bystra setup. So without further ado, let's get started. So supply and demand, it is actually very simple. We will use supply and demand in Bystra context as an entry point, or we will mark our zone. So the rules of supply and demand, it is very simple and easy. First, we have to only sell at the supply zone and buy at the demand zone. Now do not go and buy at the supply zone or sell at the demand zone. This is against the nature of supply and demand. So remember this, guys, very important. Next, let's have a look at the types of supply and demand. So there are 4 types of S&D, 2 out of which is the supply zone. So let's have a look what is the supply zone. Supply zone consists of 2 types, which is the Rayleigh base drop and also the drop base drop. And the other 2 types of demand zone is the drop base Rayleigh and also the Rayleigh base Rayleigh. I will show you few of these example later on. Most important, guys, you have to remember these 4 types of supply and demand. Okay, so next, 2 of these here are the reversal and 2 of the base here are the continuation. Do you want to take a guess? Let's try this. The Rayleigh base drop RBD will fall under the reversal category. Same goes with drop base Rayleigh will be falls under the category of reversal. Whereas the drop base drop and the Rayleigh base Rayleigh are the continuation category. Simple, isn't it? Remember this, guys. Don't get confused with the reversal or the continuation of S and D base. Okay. Let's have a look at the supply zone. So as we know that there are 2 types of supply zone, which is the Rayleigh base drop and the drop base drop. So let's have a look at the Rayleigh base drop. The Rayleigh base drop would have something similar, this kind of pattern. This is a base area. So if we look at the candlestick chart, here is the Rayleigh base drop. So I'm going to mark the zone. So mark the zone like this. So this is our base, Rayleigh base drop. Same goes here. So here is the Rayleigh base. This blue color is the base and price drop. So let's have a look at the drop base drop. Drop base drop, this something similar, this kind of pattern. We go to the candlestick chart. Let's mark our zone. So this is a drop. This blue area is the base and drop. And we mark at the candlestick chart. Here we can see is the drop. This blue color is the base and drop. Okay. And this one is also could be a drop base drop. This can be a drop base drop. This can be a drop base drop as well. So now let's look at the demand zone. So at the demand zone, we have the drop base Rayleigh and the Rayleigh base Rayleigh. So drop base Rayleigh, something similar like this in the chart I will show you in a while. So we mark the base here, and in this candlestick chart we can see this is the drop base Rayleigh. And then let's look at the Rayleigh base Rayleigh, something similar like this. This is the candlestick chart, and we mark this as the base. So here there are a lot. One of it is here. Okay, Rayleigh base Rayleigh. This can be Rayleigh base Rayleigh. This can be Rayleigh base Rayleigh. This can be Rayleigh base Rayleigh. This as well and this as well. Okay. Most important part is that we can identify which is the base, the demand zone, and also the supply zone. So how do we mark the S&D? For Bystra setup, we only using the intermittent base or zone. So what is an intermittent base or zone? I will show you in a while. First, this is a candlestick chart. For example, this is the base. Okay, guys. So full base, normally we mark from the shadow to the shadow. So this count as a full base. For an intermittent base, we only mark from the body to the body like this. So remember, guys, all of our Bystra setup, all of our entry point and so on will be only using the base, which is the intermittent base. Okay, guys, as our entry point of supply and demand. Now let's look at this one. Here there are 4 types of our supply and demand. So the Rayleigh base drop, this is falls under which category? Under the supply and the reversal category. So how do we mark the base for this? We mark here. Okay, this base, only the body. So price comes in and then come to this, react to this base and continue on the downtrend. So same goes with drop base drop. This is also a supply zone. Price comes in and continue on the downtrend. Remember, guys, all we mark at the base only. Same goes with the drop base Rayleigh for demand zone. Price comes in, continue on the upward, and the Rayleigh base Rayleigh price comes in and go to the uptrend. So I'm going to show you something from the big time frame and what is it in the small time frame. So let's go to the trading view. Hi guys, so we are back at the trading view. So I'm going to show you some example of what it looks like at the big time frame and how it looks like in the small time frame. So let's start with the supply zone. So supply zone, we will start with the Rayleigh base drop. As you can see here, there is a Rayleigh base drop in this area. So I'm going to highlight it with purple color. Let's see if we can, purple color, I can't feel it. Okay, it's okay. So let's say we mark this as our Rayleigh base drop. Okay, so you can see Rayleigh base drop. If we move to the smaller time frame, you will look, there's a lot of things happening inside here. See, it will looks very differently. And then if you go to the H4, it will looks like this. This is the base. Okay, so this base is what we call the weekly time frame Rayleigh base drop. Okay, so we go back to the weekly time frame again. As you can see, in the smaller time frame, you will see a lot of things happening in that zone. And then the next thing we look is the drop base drop. So drop base drop, I'm going to shift this here to here. Here we can see a drop base drop. This area, okay, this is a drop base drop. So I'm just going to mark this full zone just for you to see what is going on inside the SND area. So if we move to the daily time frame, as you can see, there are a lot of things happen as well. Okay, so it looks like a Rayleigh base drop, but actually in the weekly time frame is a drop base drop. In the daily time frame, it looks like a Rayleigh base drop. Price come back into this zone and then continue on a downtrend. So let's go back to the weekly time frame. So now we look for the demand zone. So here there's a demand zone. Okay, this is the drop base Rayleigh. So I'm gonna mark this area drop base Rayleigh. Here we go. So if we go to the daily time frame again, what can we see? There are a lot. Okay, so this is a base. So if you move to the daily time frame, this can become a smaller base here. Okay, so there are smaller base inside here. If you go to the H4 time frame, you can see there are a lot of things happening as well. Okay, there we go. So on H4 time frame, you can see there's a, this is what we call the demand zone base. Okay, demand zone base for the daily, and outside here is the weekly. So, and then we go back to the weekly, and then we look for the Rayleigh base Rayleigh. So there's a Rayleigh base Rayleigh here. So I'm gonna mark this base Rayleigh base Rayleigh. So inside here, what can we see? We go to the daily time frame. As you can see, it looks like a drop base Rayleigh, right? Okay, so it's all depends on which time frame that we're looking at, and then we move to a smaller time frame to find even smaller zone for us to entry. Okay, so this is how we look like at the big time frame, and how we gonna move to the smaller time frame to look for a smaller zone. So this is just a multi time frame of how we look into SND. Nothing much to show, just a simple basic understanding of how we can look into the supply and demand. So I think that's all I'm going to show you. I will see you again on the next class. Hello traders. The topic basic engulfing is one of the most common price action in forex trading. Nevertheless, we will use engulfing as a confirmation for all Bystra setups. Therefore, we will learn how to identify proper engulfing to avoid identifying the wrong type of engulfing and minimize our risks. We will learn the basic details of engulfing as confirmation, and it is crucial to understand this topic as we will frequently use it as confirmation and entry point in our class. So let's get started. Based on dictionary.com, an engulf means is to cover up or to swallow in a whole. In forex definition of engulfing, it is a pattern which is useful for traders as a signal to anticipate the possible of a reversal in a trend. Engulfing candles are one of the most important price patterns or actions for traders because it can be used as entry signals in three strategies. So the first, it is the reversal. When an engulfing candle is formed at the end of a trend, normally it is a sign of reversal. This will be a huge opportunity for traders to enter from the beginning of a new trend, which therefore able to maximize profitability. Next, when an engulfing candle is formed at the middle of a trend, this is a sign that the trend continuation is still very strong. For example, when price is in an uptrend, price form a bullish engulfing in the middle of the trend, which then convince the traders that it is still on the strong bull side. Last but not least, it can be used as an exit strategy. When the price has reached at the end of a trend, for example a bull trend, the price will then form bearish engulfing, which indicates that the seller has entered the market. This is a sign to inform buyers that bull market will end and it will be wise to exit your buy order. There are two types of engulf. First, it is the bullish engulfing, which we will only be looking at the buy setup, and the other one, it is the bearish engulfing, which we will be only looking for sell setup. Now please do not try to go and sell if you see a bullish engulfing is formed. Vice versa for bearish engulfing, please do not go and buy if you see a bearish engulfing and you try to go and buy it. This will go against the trend, and definitely the chances of you making loss is very high. Now bullish engulfing, let's look at the candlestick. So this is the type of bullish engulfing that we want to look at it. This is the bearish candle. This is the bullish candle. As you can see, these bullish candles, it eats up the whole red candles, including the wicks from the bottom to the top. And the next good bullish engulf is this type, even though the red has a longer wick than the bull, but it's fine because price could be rejected from the support and continue in a uptrend movement. Most important is that this bull engulf has to complete eaten or engulf this whole red candle, including the wick. This will be a very strong upward trend. Okay, it indicates that the rejection from the support is very strong. Not only that, it also broke this structure, which is what we call the higher high. So it is very important that we understand the structure in the bullish engulfing. Now this is a high risk bullish engulf that we do not want to engage with. The bull of this candle, it doesn't engulf the wick of this red candle. However, it did engulf the red candle's body, but for us, it's still considered a high risk setup. Most important is that we want this candle body to be close above the wick. The reason why is because we want the body clearly break this structure here, which is the previous resistance of this red bearish candle. Now this is not considered as a bullish engulf, where the red candle and with the wick is much bigger than this bullish candle. So this does not include or doesn't count as a good engulf for bullish. So high risk, we'll try not to take it. And this one, no. It's definitely a no. Now let's look at the bearish engulfing. Same as like the bullish engulfing. As we can see here, this bearish engulfing candle, it engulfed the whole bullish candle, including the shadow or the wick. See, from the top to the bottom, this is what we call a very good. For me, it's considered as a perfect engulf. And the next type of engulf that we want to look at is this. It doesn't matter that the top wick here is longer than this bearish engulf, because price could be rejected from the resistance, a strong resistance, and continue on a downward trend. We can look at this body of this bearish engulf has engulfed the whole bullish candle, including the wick. So this is a very good bearish engulfing. Now let's look at this high risk bearish engulf. As we can see that this bearish candle, it only engulfed the body of this bullish. However, it doesn't engulf the shadow or the wick. It could be that there is a strong buyer rejection from the bottom. Therefore, this is still considered as a high risk bearish engulfing. Now, this is definitely not a bearish engulf because the bearish candle unable to engulf this whole body, including the wick. Not even the wick of this bearish engulfing able to break this structure here. So it hasn't broke the lower low structure. So this is definitely not a bearish engulfing. We would definitely want to avoid this, and definitely doesn't take this as a bearish engulfing. Now let's try to do some exercise. Are you able to identify the good bullish engulfing, the high risk bullish engulfing, and the no bullish engulfing? Now I'm going to give you a few seconds to identify it. Let's see whether you get it correct. Okay, the first one. Yes, as you can see, this is the result. The most left and the most right is definitely not the engulf that we want to choose. It's only both in the center. Did you get it right? If you do, I would like to say congratulations. If you don't, it's okay. Let's just keep on practicing, keep on trying until you're able to familiarize with this good bullish engulfing. Same goes with bearish engulfing. So here out of 4, let's try this exercise again. Are you able to identify the 2 good bearish engulfing? One is a high risk and one is a no-no. Are you ready? Let's look at the answer now. Yes, both centers are the high risk and it is a no-no bearish engulfing, whereas the most left and the most right are the good bearish engulfing. Did you get it right this time? If you do, I would like to say congratulations to you. Yes, you made it. But if you don't again, it's okay. Just keep on practice until we get it right. Let's look at the example in the MT4 chart. Here, we can see that there are some of the bullish and bearish engulfing. Now, are you able to identify which are the good bullish or bearish engulfing, which are the high risk, and which are the one that we shouldn't take it as an engulf? Are you ready? Let's look at the answer. Yes, as you can see, these blue are all the good bearish or bullish engulfing. Here we have the bearish, bullish, bearish, bearish, bullish. Here we can see there's a bearish with a continuation of a bearish engulfing. So here is the reversal and the continuation. And here's some of the bearish engulfing. And the red ones are the one that we shouldn't choose because it is considered a high risk or a no-no. This is a high risk, high risk, high risk, high risk. So make sure we're able to identify some of the bearish or bullish engulfing. For example, like this. This is the one that we shouldn't take it as an engulfing. Okay, so this is a bull, this is a bear, or this. Okay, a bearish engulfing that is not considered at all. So please be wise in how we choose our engulfing. Make sure if we choose an engulfing, we need to look at the strong Marubozu candlestick. So I think that's all we learned about engulfing, the basic of it. Hope you guys can practice more and sharpen your eyes, because this will be very cool and we will use it very often in our next class. See you in the next class. Hello traders, in this class, I'm going to introduce to you the Fantastic 5 setup which recommended by teacher Nora Karim, founder of Bystra. Without further ado, let's start! The reason we choose this Fantastic 5 setup is because these setups occurred in the Forex trading chart consistently. As mentioned by teacher, the Fantastic 5 setup is a setup that always applies in all pairs and in all time frames, especially in gold pair. As you learn more during this process, you'll start to realize that these 5 setups will occur more often than any setups that teacher has shared. Moreover, these 5 setups is much easier to identify, at the same time to find confirmation. Let's look at the Fantastic 5 setups. The first one, we would have the support and resistance continuation type 1, short form SNRC1. The second type we would have the support and resistance continuation type 2, short form SNRC2. The third one would be the Quasimodo reversal, QMR. Fourth one, the Quasimodo continuation, QMC. Last but not least, Quasimodo manipulation, or we call it the QM manipulation, short form QMM. Now, in these 5 setups, there are some setups that is under the category of reversal, and some setup are under the category of continuation. So let's look at it. The support and resistance continuation type 1, which is the SNRC1, will be fall under the continuation category. Same goes with the SNRC2 and QM continuation, the QMC. The Quasimodo reversal QMR will be fall under the reversal, and also the Quasimodo manipulation, the QMM, will fall under the reversal. Now, reversal is always high risk compared to continuation. Here are some of the important notes. It is important for you to jot down and remember these notes. Every time you do an analysis on your chart, it is crucial to always remember these key points, and please do not ignore them. So first, all of Bystra setup has to be quick retest. We do not want the price to linger around too far or too long before coming back to our entry point. That would be considered as high risk. Secondly, all of the confirmation of the Bystra setup has to be at the body of the candlestick and not at the wick. You can refer this note back at the basic engulfing that I have shared you on the previous class. The third one, multi-time frame analysis is the key. If our setup is in H1, for example, then we should shift our time frame to H4 or daily to look for confirmation of our setup. There is no such thing as valid or invalid in your setup. The only thing that we can do is to control the risk, because the market, how it moves, we can't control it, but we can control how much is the risk that we want to risk and how to lower down the risk. That is the only thing that we can control. Lastly, when you see a reversal and a continuation setup, reversal will always win against continuation. Why does the reversal will win against continuation? It's because reversal involves 2 trends, while the continuation only involves 1 trend. That's why reversal will always win against continuation if you meet 2 setup that is almost in the same area. Please do remember these 5 keys. They are very crucial towards our analysis every time when we want to find setup. Please do not skip. I repeat again, please do not skip all these 5 points. These 5 points will make us more profitable in our trading. See you at the next class.